right? This is the strategy of the business. We're going to acquire digital property, and Bitcoin is the world's greatest digital property, like a property development company. Like if I moved to Dubai and I decided just to buy all the land in Dubai, or all the land I could buy, or buy up all of Manhattan. There are all these conventional mainstream investors, and they've been watching Bitcoin. And when Bitcoin was going up too fast, when it was running parabolic, they're afraid to buy in. But right now, sitting in a plateau where they're a lot more likely to buy it, by the way, if the return was 5x the NASDAQ. We got some really great news this week. Miller came out and he announced that half of his personal net worth, half of his personal portfolio is invested in Bitcoin. And he said the other half was like an Amazon. He's held Amazon for 25 years or whatever. And, Amazon is famously volatile. It went through lots and lots of 80% downs and a 90% drawdown. And he's just been sitting forever. He's like a classic hodler. And Amazon's big tech. In essence, what he said was, I own digital gold and I own a big tech retailer, and that's half and half. Now, he had a year ago, he said, I have some, but he never said 50%. Yeah. Now you've got all the other mainstream investors that have some gold exposure, the Paul Tudor Jones and the Stanley Druckenmillers and the Ray Dalios and the, fill in the blank. And they're all starting to wake up to this. And when they see Bill Miller, who's runs multiple billions of dollars and is a billionaire in his own right, saying this is the only thing I can find that can go up by a factor of 10 to 50, that also is a store of value asset, right? And then they start to pay attention. Now, if Bitcoin was trading at an all-time high and it was like on fire, they'd be afraid. But you kind of like the idea that Bitcoin is 40% off the all-time high and it's catching its breath. And you think maybe this is an entry point. And in fact, I've seen lots of high net worth individuals and family offices that they're just now starting to do an allocation to Bitcoin. Like maybe we should allocate 5% or we should allocate 2.5%. February they would have been, or March or April or May, they'd be afraid. And now they're through a lot of the risks. The China crackdown de-risked the situation. The consolidations de-risked the situation. Every single publicly traded miner, every miner that comes public de-risks the situation. All the political, the regulatory clarity is de-risking the situation. And so I don't think we're in a bear market. I think Bitcoin it's moving through this phase where it moved from 4,000 to 40,000 with volatility, and it's going to move from 4,000 to 500,000. I mean, the next plateau is the gold plateau, right? To basically digital gold replaces gold and flips gold, and that's like a $500,000 number, I think. And then after that, it's really just a property index or a monetary index, which should be 10x that. So, what I see is a move from where we are to 500,000 over 3, 4, 5 years, and then a move over the following 3 to 5 years. It could take 10 years, but a move in the next epic from the 500,000 to $5 million range, because ultimately people say, what is Bitcoin? Well, Bitcoin is the apex property of the human race. It's the only property you can truly own. So the question is, who wants it? Well, everybody in the world with weaker property. So what is weaker property? Well, how about like a second house in Africa? Like how about land in the middle of Africa or Asia or South America? How about a building? And fill in the blank. Would you rather own a building in Venezuela or Argentina? How about a ranch in Colombia? Like everywhere in the world where you have excess money and you want to invest in property, the problem with investing in a currency derivative is the currencies are collapsing. right? And they're collapsing at 10, 15% a year in the Western world, but they're collapsing at 40%, 50, 60% a year in the developing world. So bonds, they're weak property. Real estate is weak property because you've got a politician that can do, they're going to tax it and they can take it away from you, and you can't move it if you need to leave. And you can only rent it to people in the country. So, and then equities are weak property because the CEO controls that equity. They control, it's a security. And if you own securities, the bank controls it. Like, let's say you own a security, you live in Zimbabwe. Well, the government of Zimbabwe can take it away from you. Try buying it at JP Morgan, they can take it away from you. The CEO can print more equity and they can take it away from you. A random government, in Australia can put a fine on Google and they can take it away from you. A union can unionize, right? So if you're holding securities, you've got lots of risk. If you're holding real estate, you've got lots of risk. If you're holding gold, well, the bankers can print more gold paper and the gold miners can mine more gold and try to move through an airport with $10 million of gold, or try to move through an airport with $10,000 of gold. Try to move through an airport with $1,000 of gold. I tried to move through an airport with a pen knife that Amazon sold me, and it was labeled as TSA friendly. I couldn't get a knife that's like a quarter-inch or half-inch blade through a metal detector in an airport. So your property is all weak, all of it. And so how much is weak? Hundreds of trillions of dollars of weak property. So ultimately, I think that there are 8 billion people on the planet, or there shortly will be 8 billion people on the planet, and they're all going to want some amount of digital property instead of like that second Airbnb or that investment property or that equity. By the way, I even did a little survey on Twitter where Cash App let you they let you decide whether or not you wanted to give someone the gift of a stock or the gift of Bitcoin or the gift of cash for Christmas. And I actually put in a survey. I said, what do you want to give away? Cash, stock, equity, or Bitcoin. It's like, 93% Bitcoin, 7% stock. Like that is to say, everybody intuitively understands that equity or securities are risky and that Bitcoin is property. And so it's like a 20 to 1, 10 to 1 or 20 preference if they need to own something. You have to be educated. Among the educated, there is an overwhelming preference for property. And I mean, it doesn't take a rocket scientist to figure out that if I offered you $1 million of real estate property in Africa, or $1 million worth of stocks of African companies, or $1 million worth of gold in Africa, or $1 million worth of Bitcoin in Africa, which of those four would an educated person choose?